Hi, I'm Zach Freeman, staff to JLARC. We recently reviewed a hazardous substance tax preference for certain pesticides. It had two goals. One, to keep pesticide distribution centers in Washington, and two, to increase total hazardous substance tax revenue. We found the exemption improves industry competitiveness, but likely has no effect on tax revenue. The preference applies to pesticides that are stored in or transported through Washington before they are sold out of state. To be eligible, the pesticides can't be manufactured, packaged, sold, or used in Washington. The preference was enacted in 2016 and expires in January 2026. The legislature stated that it will extend the preference if this review finds an increase in average hazardous substance tax revenue. JLARC staff found that 7 businesses have used the preference. Their combined average savings was $305,000 per year. However, since 2019, use of the preference has declined. Just 3 businesses claimed the preference in 2022. The preference reduces the cost of storing agricultural pesticides in Washington. That meets the legislature's first goal of keeping distribution centers in state. However, the goal of increasing total hazardous substance tax revenue likely has not been met. Beneficiaries' hazardous substance tax decreased by 74% from 2015 to 2022. And this decline is not due to the preference. In addition, the legislature changed the tax rate for liquid petroleum products from a value-based rate to a volume-based rate. And this led to a significant increase in hazardous substance tax revenue for the state. The preference likely had no impact on the increase. The legislative auditor recommends continue and modify the preference. Modifications might include establishing new metrics to account for changes to the hazardous substance tax or recategorizing the preference as one intended to provide tax relief. Please see our website for more on this and other tax preference reviews.